Today is Sunday, March 2026. I'm going to go over Bitcoin macro and explain why we're in a dilemma right here. It's a very hard area to really do a technical analysis because we've got a lot of confluence for support and resistance. So let's break it down, and then maybe in a small time frame towards the end we can look for trades. But the main goal of this is to explain to you why this is such a hard area. Right, let's begin with the trend line that was broken. This is the most suited trend line across. And once we drop that, and you can see the confluence in that area, look at price, you can see all the touches along the way, and that trend line is very, very clean. So we're putting our pivot points, the dots, and with each pivot point, we have this level that we want to use as a reference. And those levels will be for our Fibonacci. So we're going to have a level of confluence with Fibonacci, and these are the areas here as well. Here, if you look cleanly, we can see resistance, support, and resistance perfectly without even going into anything. This is a well-suited line. Obviously, there's levels within that, but from the macro, that's what we've picked out. Now, moving on to other tools. So this is our general approach. From the low, we look for the anchored VWAP. And we didn't quite touch it. Now, that is from the very low. If I was to move this slightly above, let's see what it does. If I was to move it to this point of reference or that point of reference, you can see it touch. It's not much, but this is just as valid as that there. So that point of touch is important. When we use this reference, we can see the confluence along the way. So that is it gives weight to this anchored VWAP, as well as this one, the red one, at a point. So they're both valid. So we can see from that perspective, we have a strong level of support and resistance. Now, why is this more strong of a resistance besides that? We'll go into it a bit later. But why do we also find support here? So if we do the fixed volume range across the macro, right? So if you look across, we get a fixed volume range from there all the way across, and I have one. We can see the value area high is also acting as support. Once the price regained that level, the value area high is acting as support. Now we've got that resistance. Now Fibonacci will come into this as well. What we have is also this cluster here that's going to influence this. And we will add that into it. So you can see the negative point of control is not really doing its job. It's in between support and resistance at times. But we can see the value area low of 52K. And now what we're going to do is add in some Fibonacci levels. So we can see that. All right, so if we label those, we'll just remove this to make it cleaner. So we're still in a range. Now look at the past. That took 6 months to break out. So we're here for 6 months, and that's probably accumulation, but we want to buy those dips. Let's go on to why this could be a key level, and why even further down to 58, 57, even to 52 makes sense. Now, you know that from a trading perspective, we look for liquidity. So the liquidity is all along here to this level, to that point. There's a whole bunch of volume there. There's reasons to buy the dip. Okay, so we're just going to put that out the way, but that's our liquidity level. Obviously, the liquidity is all the way down, but we're looking at for this bit of a shakeout. The elliott wave so far, we can argue, is a 1, 2, 3, 4, and a 5 on a smaller time frame. However, we can also see this taking place as 5 becomes 3, that becomes 4, and then 5 further down. Wouldn't surprise me if it's down there. So that's one model. So if we're looking at for very similar to in the past, so if we look at over here, if we were to look at from a fractal perspective, we have this sideways bear flag, which could be there or here. And then you got this capitulation all the way down. But here, that's a bit of a bear flag. And then that is really where the accumulation took place. This is sort of extra from the FTX debacle. Maybe, maybe not. But that was a shakeout area. So in essence, we're looking for this to be sort of our bottom level historically. And it's like a diagonal ending pattern. You can also do it that way. So we might just have that as well. That's one way. The other one, if we add in the ABC, which is this is our A, that is our B, and that is our C. And then up, right? So we're not saying it's there, and we're not saying there. We'll look at Fibonacci from that perspective. So we've got two models that we might I can't see any other model we're going to factor in, all right? With this. So we're looking for that type of scenario as well. So when we add our Fibonacci, what we're going to do, we use this point of reference because ideally, if this is our 1 and that's our 2, that will be our reference for if this is a 3 and a 4. So if that's a 3 and a 4 and there's 5's up, that makes sense. With the 3 to the wave 2 is what we use for Fibonacci. And you see cleanly when we do that, the 618 is perfectly placed to be the support. And it might just be there for a while. So if we lose this Fibonacci, my next Fib level is a 6.8. And then the liquidity comes into place. And we have these other smaller details. But you can see the dilemma it's going to come into with Fibonacci. So if that's our Fib level, 618, it's perfectly playing its role. Now, we haven't put in our days and weekly levels, but that's later on for looking for the minor or the local trading opportunities. But from a macro perspective, the 618's there, and we can see it perfectly aligned with the value area high, finding its area of support. The macro, back to that. So we've got that, and we've got that. You see slightly a bit up from that point to there. So let's just make them different colors. You can see 0.382 acting as support, 618 here acting as resistance if we use this reference point. If we use this further low, we've already established that. Now let's see what we get if we put that. The 382 is now acting as support with these point of controls. Now you can see the dilemma I have with using Fibonacci. It is stuck between the key level that has low confluence as resistance, 0.5 Fib, 0.618 support, and so we're in this range. And I dare say if we lose this range to the low side, we look at these levels as support further down and so on. And then we'll look at the Fib Elliott wave count like I showed you before. Now this fractal here reminds me of this here. Very, very similar. So let's have a quick look at this. It is very close. Let's split it in half actually. Don't make it easier. Here we go. So what we had here is very, okay, let's put on the 12-hour here. We're trading it to this basis as well. So 12 here. If we were to use a magnet, and if we say this level was our reference point in the past, it didn't quite touch it, so we might have say that level there. Okay. So this one's a bit more difficult, but we could see from that perspective, if we use these reference points for the channel, halfway line tends to show that that's where the support. And if we do it similar in fashion to where we are now, right, the channel, we can use this channel right here. We can use that point there, and we'll bring it down here. You can see that we're going to get support here. It's going to bounce. We're going to likely do what we're seeing here, and then another thrust up, but not quite take the top out. So I'm looking for that potential trade. So I'm thinking even if it dips a bit, takes out some liquidity here. If it regains that area, that's where we look for the long. And there's a bit of an accumulation, bit by bit. But ultimately, there's a thrust. And the thrust, if you look at this, historically, price action, it's roughly that level there. So in our case here, we're going to look for roughly around here. Where if it gets to that level, look for the short, and you can see this one, it whips back and then tries to do it again. So it was a very quick, strong move, but the resistance is there, and then bang, all the way down. Now so if we get that whiplash type of thing, double rejection, or just a one rejection and back down. But we can see why this is going to be a strong support. From a fib perspective, it's probably 0.5 fib. So I'm looking for it from this perspective. If I was to locally trade it, I would like to see this come down, touch a 0.618. That would be nice, because it takes out a lot of liquidity, and then we see some strength. But for now, midway is what we're looking for as a potential entry, because here we didn't see it fall. So if we do that and the 618, you can potentially miss out the mid level of the channel, not the 0.5, the mid level of the channel. You can see how it starts. It's the wicks, and then the body of the candle at the Fibonacci. So we're looking from that perspective as well. Got this layer here for entry long, and this fractal might just play out, but it's worth it. Just see if price holds. It's a good. What we want to do is make sure we enter the shorts. We've explained why this is a strong resistance and why this level is a strong support. So if we go back, so with our fractals there, and you can see a strong move, and in essence, it's probably 1-to-1. Let me have a look. Yeah, there you go, 1-to-1. And there. So if we get that, you never know. If that plays out, you can see it's 45, 42. But it's not in the same context. I think we won't go that low, but the 50K range, but 45 is the ultimate bottom in my opinion, if it was to come down. So let's go back to our main chart. We spoke about that. So we got our clear level of resistance. Now you can see what we just explained there is naked point of control 0.618. So we've got that support level. If we add in our channel here, or fib level, either way, we said that is our channel there, and that's our bottom. You can see that swing failure pattern, taking it out, the key level, and down. So we're going to see this area. So if we just put the Fibonacci from there all the way to the bottom, I like to see it. I like to see this come down here, and then if it gets above that, then we know there's strength, right? And then you go for the long. But we can also miss out if it doesn't come down here. We look for accumulation here. There might be a wick eventually, and that will be a signal, SFP, on the 30-minute to 1 hour. So what we're looking for is two scenarios, like we explained: a potential 5-wave count down here to the initially 57, initially here, then the 57, 58K, and then if that doesn't hold, down to the potentially 45 to 47K. But for now, we're going to look for this type of trade. Now, we can do more analysis with adding the daily levels. So if we have our chart, let's see, so here we go. A 3 daily level is also very confident with the 618. Point of control. Oh, geez, there's a whole bunch of stuff there, isn't there? And our weekly was up here as resistance. So if price comes up, I see this. Maybe if it finds acceptance, then we'll look for the next one and down. But it could keep going up. So we've got our levels here. That based on the naked point of control, 618. So this level is a key level for finding a rejection and then back down. Maybe up, get some liquidity, and back down again. This is going to be a hard area to trade for seasoned traders. That is the approach that I'm going to have. I'm not going to talk about more than that. I think we talked about the macro ABC. So if this was our bottom and we get a big move to so this is our A wave, that is our B wave. that could be a C wave. And that's one way of getting there, or we play that macro fractal and we just come down straight and we find that as our fifth wave. Okay, so I'm going to leave that, guys. Tell me what you think of this. Please give me a like and share, and I'll talk to you soon. Cheers.